On the 3rd of October, Tesla shares were down 7.3% to $245.98, bringing the loss so far for this year to 30%. This plummeting stock price has followed major disclosures from the car company, and investors are wondering if this is really the best time to let go of their shares. Hello everyone, and welcome back to Everything Tesla Stock. Tesla recently had its biggest drop of the year, with the stock down about 8%. In August, shares of the car company fell 2.3%, closing in at $869.74, off for the fifth consecutive day. According to Dow Jones market data, this was the stock's longest losing streak since March of 2021. The stock was also down in September, owing to increased competition and higher interest rates. And now Tesla stock has plunged even further, signaling great uncertainty in the stock's performance in the future. Could this really be the time for investors to sell their Tesla shares? Let's find out. But before we do, if you like this type of content, don't forget to subscribe and turn on notifications to keep up to date on everything going on with Tesla. Tesla shares dropped to their lowest price in more than 2 months after the car company posted its deliveries for the third quarter of the year. The shares dropped 8.6%, closing at $242.40. This drop has left many wondering if Tesla stock is overvalued. Tesla's stock price is dropping at a crazy rate, and it's uncertain what the future holds for its investors. But to better understand the current state of the stock, let's take a few steps back to the things that have happened in the past 2 weeks. Be sure to stick around until the end of the video to get all the details. Tesla recently held its second AI Day, and the event featured updates on several major projects which are currently in the works for Tesla. The company had previously set its second AI for August. However, Musk announced sometime later that the event had been moved to the 30th of September, in a bid to have a Tesla prototype ready of its humanoid robot. The day finally came, and Tesla did indeed have a prototype ready for its robot, and other updates on projects like the Dojo supercomputer. Tesla disclosed some significant progress with its Dojo supercomputer program, as well as some impressive new technologies to improve its self-driving program. However, it stated no clear path to achieving the plans, leaving investors in doubt as to when these are going to be delivered. The company also unveiled 2 prototypes of the Tesla bot, but they were not as many had anticipated. One of the prototypes could barely walk and wave to the crowd, while the other couldn't walk at all, although it was able to make a few waves, and was supported by about 4 individuals. Although Tesla released some videos of the robot completing other tasks, those were so unimpressive for Tesla enthusiasts who were hoping to see so much more. This was obvious from the many bullish comments that followed the unveiling of these prototypes, especially on Twitter. However, Musk responded to these comments by stating that only a few people understand the value of the Tesla bot, and he believes that the humanoid robot can eventually increase economic output by an order of magnitude. They may be true and could have helped reassure investors, but for the rather disappointing Q3 deliveries that were announced by Tesla a day later. The automaker earlier this month said that it produced 365,923 vehicles and delivered 343,830 in the third quarter. Although the deliveries marked a new record for the car company and were a lot higher than the number of deliveries recorded in the second quarter, they were still below the nearly 358,000 vehicle delivery threshold expected in a Bloomberg survey of analysis, and were also well below Wall Street estimates. Tesla cited delivery issues which resulted in the gap of 22,093 vehicles. According to the automaker, as production volumes continue to grow, it's becoming increasingly challenging to secure vehicle transportation and capacity at a reasonable cost during these peak logistics weeks. Musk also addressed the issue via a post on Twitter, stating, "Smoothing out the crazy end of quarter delivery wave to reduce expedite costs and relieve stress on Tesla team, aiming for steadier deliveries intra-quarter." Following the disclosure of Tesla's Q3 earnings, the stock price plunged even further than it had during the AI Day event. The shares dipped to their lowest price in more than 2 months, dropping 8.6% to close the session at $242.40, the lowest finish since July 18th. While the plunging stocks is one major issue for the company, there are also concerns about Tesla's car demands. The delivery gap for the automaker in the last quarter was rather significant, and possesses a question of whether there is a crash in the demand of Tesla cars. Tesla's been recording huge demands for its EVs in the past years, and Musk once stated that Tesla's got no demand problem. However, with the recent numbers of deliveries, coupled with the effects of inflation and the increase in waiting time for Tesla cars in some of its markets, the company may be experiencing a decline in demand. Tesla's waiting time in Europe is one major factor to be considered, ranging from about 3 to 5 months. The duration is still fair in locations like China and the US, owing to the production ramp and the launch of new gigafactories. If the waiting time remains the same in Europe, then demand for Tesla cars may drop in this market, especially since wait time affects demand. And if demand dropped to a rather significant level over the next few years, Tesla may be unable to reach its goal of 30 million cars produced in 2030. Aside from the Tesla bot and the drop in Q3 earnings, investors appear to be majorly disappointed that Tesla didn't communicate clearly how much closer it was to its goal of delivering a self-driving system. Musk said sometime back in 2016 that by 2017, Tesla cars will be driving all the way across the US without any hands on the wheel. But that's simply yet to happen, and there are no indicators that it's going to be happening anytime soon. Tesla has also delayed major projects like the Robotaxi and Cybertruck. The company has delayed the release of its Cybertruck twice already. During its second AI Day, Musk stated that the Tesla bot should be ready for mass production in about 3 to 5 years. But seeing that the car company is yet to bring many of its promised projects to limelight, investors may need to step back and reevaluate things. However, despite the not-so-impressive updates on the Tesla bot, there are still reasons to believe that Tesla can do better with this technology. Most people compare the Tesla bot to products of highly recognized robotics companies like Boston Dynamics, but Tesla is not trying to make a robot that is as agile and technical as the ones made by these companies. The automaker is only trying to make a robot that will be useful and can be manufactured on a large scale in order to keep costs down. Some Boston Dynamics robots cost more than $75,000, which is a very high price and will most likely be unaffordable for the average person. On the other hand, Tesla is trying to make a robot that is much more affordable and can be sold on for as low as $20,000. Although Tesla's robot might not be like its highly advanced counterparts, it does seem that Tesla is more focused on producing a robot with the ability to move from one location to the next, with a fairly high level of dexterity in the hands, and one that is able to understand and navigate its environment. Likewise, Tesla's got the potential to record high delivery values in the fourth quarter, even though it did miss expectations from analysis in the last quarter. According to Wedbush analyst Dan Ives, Tesla's recent deliveries report is more of a logistical speed bump rather than the start of a softer delivery trajectory into the fourth quarter of 2023. He added that he believes the unit set up into Tesla's fourth quarter is very robust and could approach massive numbers that are in the 475,000 range. This is very possible since a recent report from Reuters stated that Tesla plans to produce about 495,000 Model Ys and Model 3 vehicles in the fourth quarter of this year. These two car models account for about 95% of Tesla's EV output. Likewise, the company is ramping up production in its new gigafactories in Texas and Berlin. The automaker confirmed earlier this month that its Berlin gigafactory has been able to ramp up production to 2,000 electric cars a week for the first time. Its Texas facility also passed 10,000 Model Y production recently. Tesla's gigafactory in Shanghai is experiencing a significant ramp-up in production as well. However, while Dan Ives is hopeful about Tesla's Q4 deliveries, he also stated that the lingering worries about Tesla's demand issues will persist until there are more details at Tesla's conference call on October 19th. While the recent drop in Tesla's stock price has created a lot of panic amongst some Tesla investors, some others may see this as a good time to load up more on Tesla shares, since they are now trading at a lower price. But in all, it depends on what you believe as an investor. Do you think it's time for Tesla's investors to sell their shares? Let us know down below, and don't forget to tell us what your valuation of Tesla is. If you'd like to know more about what Tesla's been up to in the last few days, go ahead and click on the next video on your screen. See you there.